thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into what's driving mortgage rates on a daily basis, whether it might be something from the economic data that's being reported, or if it's headline news, or perhaps just a change of sentiment with the investors, which could be good news is now bad news, or vice versa. So we kind of give you the behind the scenes of what's affecting mortgage rates on any given day. So if you're in the market to look to refinance or purchase, these could be a great series of videos to watch and follow as you probably watch rates at any given time during that process. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys answer any questions you guys might have. However, we would like to earn your business. So if you guys are looking to refinance or purchase, please reach out and let us know how we can help you guys out and obtain the best program for you guys that's suitable for you guys. Without further ado, we'll start off with the economic data. Today, we really don't have anything going on. We do have a three-year auction going on today. This week will be primarily, I'll show you the week's calendar here. This week is pretty much inflation data, so we'll have that, the wholesale side, the PPI or Producer Price Index on Tuesday, and we'll have a 10-year auction going on that day. Wednesday, we'll get the Consumer Price Index or CPI, and we'll get the what else here? We'll get the jobless claims coming in early because Thursday is Veterans Day. Will be closed, so they'll release that information, which will be typically every Thursday. Release a day early on Wednesday, and then we'll get some wholesale inventories. And then Friday, of course, we get consumer sentiment. So we got some auctions going on this week that could affect the bond market, and then of course we also got the inflation data, which will be important to watch as well. This headline news today is kind of taking this cue a little bit from last week. They're still kind of looking at Q3 earnings reports, but there are some concerns for inflation. We do got some Fed speakers out today speaking. One Bullard out of Kansas City did mention that he foresees the Fed potentially raising rates twice next year, and if inflation persists, that could be sped up a little bit. So that is something that investors will keep an eye on. He is known to be a bit hawkish, so we'll have to see what other Fed members say about it, because they may have different opinions as well. But that is something that we will obviously listen to. And then Friday, the thing that hit the markets was a big deal. Was I believe it was Pfizer that rolled out a new anti-coronavirus pill. I guess it's a pill you can take. So if you get it, it'll help out the symptoms and hopefully reduce hospitalizations. But that hit the markets, and the markets really like that. As you can see here, the bond market did really well on Friday. It jumped up, closed up 41 basis points. So not only did it clear 25, but it was testing the 100-day moving average and did extremely well. So we had some nice improvements on Friday. Sorry I wasn't here to help you guys out with Friday. I was on vacation for a weekend trip, and back obviously now. Right now we're down about 9 basis points from where we left off on Friday. So we started the morning off touching off the 25-day, or rather 50-day moving average. We did kind of rise upwards to nearly unchanged levels, but we're down about 9 basis points. It was worse, but it has been slowly over these last few moments, kind of slowly improving a little bit. So when I first started this, I was looking at minus 14, and it went to minus 11. Now we're at minus 9 over the last, I would say, 30 minutes or so. So we're seeing some slight improvements on there. So maybe we might get that later in the day here. Same thing with the 10-year Treasury. We broke down below, touched off the 50-day moving average. And kind of sitting at this level right here, way below. So we had a really good day. Obviously, improved. Way down to about 1.4445 roughly on the improvement, but now we're up to about 1.48. So it did raise a few ticks in the Treasury, 10-year Treasury right now. And what does all that mean? Well, mortgage rates right now, mortgage rates are unchanged. We haven't really. Early lenders may come out with a little worse pricing. As the day goes on, you may see some slight improvements on there. The later lenders, like the West Coast, when they come out with their pricing, it may not be all that much different from what we saw on Friday. So we could see some basically unchanged levels of Friday's pricing here, which still bodes pretty well for investors or people looking to refinance or purchase here. Let's take a look here at the national average now. We got 30 at 3.09 and the 15ers at 2.5. Again, these are all have built-in points into them, and these are based on conforming limits around the U.S. And uh, so again, these are just kind of the national average right now. So just give you guys an idea of what it might look like if you guys are out there shopping, a rough idea what the rates might look like. All right, folks. Hopefully that answers any questions. If you guys like these videos, please smash that like button, follow. We greatly appreciate you guys viewing and following us. If there's anything we can answer for you guys, please reach out. We're here. And you guys have a great rest of your day. And thanks so much for watching. We'll see you guys tomorrow's video. Bye-bye.